Clearly, the markets are celebrating this or cheering this Union Budget 2017-18. Indian equities were in a celebratory mode. There was a sudden spike in the Nifty 50 index after the budget speech just ended, and the Nifty now rallying as much as 1.6%, 150 points to cross 8700 mark. Of course, we have wiped out all the demonetization losses and even recovered much more than that. Near 3 months high is where the Indian equities are. All indices bearing pharma and IT index, which are more global driven, are rallying anywhere between 2 to 5%. So good news or bad, no bad news is good news is what it seems to be like. Welcome, Mr. Pashupati Advani. Just want to know your reading of the budget. No major announcements were made as such, but the markets seem like they just don't want to stop their run.
Well, the thing is that this is a mindset budget. What the finance minister said is, we want to get more taxpayers and we want to have them even pay a small rate of tax. So what he's done is he said, okay, you can earn more, but you can, whatever you earn, you only pay 5% tax. So that is who he's trying to capture, because he's saying there's a lot of spending there. We just want them to come into the net and we want to control the spending. So you've got all this emphasis on digital payments and digital wallets, as well as trying to get people into the net. If you know the incentive that less than 3.5 lakhs a year, you have to pay 2,500 rupees in tax. So that's an incentive for someone who's not been a taxpayer to come in. So this is a leap of faith, I think. So, you know, and this will actually capture all the people who in the IT sector, hospitality sector, who are earning 25,000 rupees a month in the urban areas. They're going to have to step up, because there will be deduction at source which they have to claim back for.
Right.
So the idea is they want more compliance, and I think if that works, it's great. If it doesn't work, then the next budget will be a danda.
Right. Okay, so Mr. Advani, this budget's also marked one important thing that comes to foreign investments. First of all, the government is looking to abolish FIPB, and they've also made some changes when it comes to provisioning of exempting indirect transfer provisions, that is for foreign portfolio investors. Of course, it's a positive move, but specifically with respect to FDI, how do you think the government will go about this?
See, they have, as it is, got sectors which are open sectors and closed sectors. They're just making it easy and saying that, you know, we don't have one less layer. I mean, everybody wants a single window. So, you know, the FIPB wasn't working. For example, they were also trying to put all the tribunals under one head, for example. So they're just trying to simplify the procedure. They want to get us on that ease of business chart where we are at 160 or 170. We want to get us up, start moving up as a place to do business.
Right.
So a lot of the things that have been done is saying, please, let's make business easy.
Right.
So it's nice that he's announced in the budget. Implementation in India has always been a challenge, and hopefully it will happen. But these things are slow changes. They're also mindset changes.
Right. You know, as far as the markets are concerned, we've had, of course, a certain amount of allocation to the agricultural, sector. It's about a 24% growth. And once again, we have seen a lot of these companies being held by a lot of mutual funds, but they're also expensive to a certain extent right now. How would you go about when it comes to companies belonging to the crop protection sector, the fertilizer sector, or for that matter, seeds?
Well, you know, that's, if we don't have agricultural growth, we are not going to be able to bring our economy to the growth levels that we'd like. So they're talking about 7%, 7.5%. Everyone says it's actually closer to 5.5%, 6% because of the demonetization and a couple of months having been taken out. But the reality is we need that rural growth also. And so the incentives are being given to whom? To the farmer, to make sure the crops are good, the yields are improved. I think it's just a question of improving the efficiencies. And then he's also trying, you know, I heard in the budget, and I don't know how that's going to get implemented, but the way, you know, Amul milk is done, where you've got milk cooperatives, he's now trying to have food cooperatives,
right,
so that there'll be some gradation and some, you know, less wastage in the food corporation.
Right.
So it's conceivable that he may say, we're not going to have the food corporation of India anymore.
Right.
We'll just sell it straight to the, you know, from the fields straight to the retail.
Right.
So, you know, if, you know, that's a nice dream. Implementation in India, as you know, it always takes time, but it's good to dream big.
Right.
The divestment target for FY18 has been set at 72,500 crores, and that's a big number. The government has, of course, already stated its intention to list some of the general insurance, state-owned general insurance companies. Do you think this entire news flow will keep all these government-owned or state-owned companies buoyant for some time at least?
No, for sure, because I think that, rather than having government entities sell into the market, they're going to be selling into these new mutual funds, ETFs, as well as IPOs of insurance companies. So I think there's less pressure on the market. But at the end of it all, 72,000 crores is $10 billion. So it's like, it has to come. And, last year, previous years, FI inflows have been that much. Last year, they were not. But as Madhu just mentioned on the TV, you're still getting 50,000 crores out of SIPs. So maybe there is a cloud in the silver lining. But the reality is we need more retail participation. You'll have more incentives. I think, if people start earning 5 lakhs and start putting money into ATC schemes, then perhaps, that money will also trickle its way into the market. And I think that's what he's looking for. And it's a leap of faith. Like he even said, the first time you file, there's no scrutiny as long as it's not huge. So the incentive is to try and, make people feel that they're welcomed by the tax authorities, and everybody contributes between 2,000, 5,000, 10,000 rupees a year towards the tax bill, and making that that deficit to go away.
Infrastructure stocks generally gain limelight around the budget always, obviously. My question is, there have not been any clear signs of that capex cycle sort of bottoming out, or even no signs of recovery as such. What does somebody do with the likes of L&T and BHEL?
See, the thing is that they are like a secondary stock. The reality is that any infrastructure project needs long-term money, which we don't really have in position. Typically in Western markets, that money comes from insurance companies. So we are seeing some of it, but it's very little compared to our requirement. What he has said, he's said very quietly in the speech, but I have not seen the fine print, is that currently when you sell a property, you can put 50 lakhs away for capital gains. He's talked about other schemes that can allow you to put more, and those are with people like REC, National Highways, Indian Railways, things like that. So that's where the money is going to come. Now, whether he makes 3 years into 5 years, if you want to put more away, or 7 years possibly, or maybe he lowers the interest rate, but the thing is there will be more money in that bucket, and I think that's what we need. Because once those projects come, then the L&Ts and the BHELs get the business, and then they benefit. It's all very well having an order book, but if the order book can't pay, it's not going to work. But just now it's fine, but with the real estate projects drying up, L&T and they're going to have a problem.
So Mr. Advani, from here on, what pockets of the market do you expect to give us substantially higher returns as compared to the benchmark indices?
I've always felt that the real juice is going to come from the backbone of the infrastructure companies. So for example, if you liked auto, then auto parts, auto ancillaries will tend to do well. So likewise, if you like infrastructure, then it's cement and steel. Now the same people who own the projects today may not be the people that complete the project, but the reality is that they're the people. They'll need cement, they'll need steel, they'll need companies like Havells and people like that for electrical supplies, and that's what's going to be required. So those kind of companies, which are the equivalent of auto ancillaries in the infrastructure market, I think that's where the bet is, and you have to bet on companies which have got efficient processes of manufacturing as well as good marketing.
So housing companies, that is housing finance companies, aren't ancillaries to affordable housing, but would you agree, would that be applied in this case?
See, I think what's going to happen in the housing finance space is that you've got the existing big players like HDFC and LIC Housing Finance, but so far they have not done any small ticket loans. These affordable housing are all going to be 5 lakhs, 6 lakhs, 8 lakhs, which HDFC and LIC Housing Finance have not yet got into. They're not writing those size of loans. Along with that, you've got these new players like Capital First and all, which have set up sort of digital platforms to capture that market. So whether the HDFCs buy those or create their own, or whatever they have to do, they have to move. Because it's small transactions. If you're servicing a 6 lakh mortgage, your EMI is very little. So you have to capture it and make sure that your systems are in place for KYC as well as for actual collection. So that's going to be the challenge. And of course, like the wallet space, where there are 30 players, 40 players, there'll be 30 or 40 players in this space, which will gradually whittle down to maybe 5 to 10, and they'll win. But who those are, we don't know yet.
The earnings season so far, if you look at that, probably there have been more hits than misses. Anything on the back of these earnings that you think it's a good time to invest in any of the sectors which have probably underperformed post November 8th?
I think the pain is still there. I think, if you look at it objectively, I think that the sort of mental shock of demonetization has taken 2-3 months out of most companies. So that's like a 20% drop in earnings. Even if you say that the costs remain the way they are, and costs still remain. So most of them, the margins have been hurt. So, but the other thing is that our market will then start looking cheaper. So I think, today is probably a little bit of exuberance more because nothing has happened. But I think we're in a range, and we've got one very interesting president in the United States who's every day got a new missive for the world. And let's hope not too many of them come our way. They've certainly sent in technology. He's now mumbling about pharma. So, those are our flagship sectors. So who knows? Right. If they start getting hurt, then, we're going to have different issues.
Just based on what you said now, I want to ask you the question, where's the Nifty headed now? Do you think, is this a case where bulls have returned, or after this strong 800-point rally, there is some correction which is warranted, especially in the global backdrop?
I think we're in a range. But the reality is, I think the Nifty will change in the sense that we'll have some, like if the insurance companies come to market, they'll come into the index, the indices will change shape. Right. So you'll have some of the real estate companies going out, you'll have some of the banks going out, because banks are overweight in the index. And so there'll be a sort of realignment of indices. So if you look at the actual number, it's probably going to be, it may touch 9,000 based on what comes in. But if you look at the same stocks and recompute it, it'll probably be, maybe around where it is, because there's no great excitement. That everyone is actually fearful about what's happening in the US, and with the wall and the immigration and all the challenges, and the fact that they're increasing rates there, so debt money is going to go back into the US. So and they're going to be doing infrastructure, and we cannot send cement to the US, it's too expensive.
Right. Well, a final question from my side, of course, is that they've said that little or no news is good news, and the markets are cheering what we've had from the budget. But is there anything that you haven't seen in the budget that you would have liked to?
No, I think what's happening is that the GST implementation is coming.
Right.
So for that, he'll have to change a whole bunch of rates. So I think he decided that if I'm trying to get it implemented by sometime in the next 3, 4, 5 months, then why tweak with it now? I'll just announce it once and for all. The following goes into GST and offer an overall GST rate. So right. Rather, there was a rumor that service tax would go from 14 plus 1 to 16 plus 1.
Right.
But he says I might as well wait 2 or 3 months and see. So, I think we have to still hear on how that implementation is going to come and what that effect is going to be.
Right. Well, Mr. Advani, it was a pleasure speaking with you. Thank you very much for your time.
Thank you.